Welcome to the Industry Leader Update by Reverse Focus. In this week's edition, we resume part 2 of our interview with AAG CEO Reza Jahangiri, and we will be discussing the changing marketplace, the future impact of the financial assessment, and also strategies to succeed in a changing marketplace. Traditionally, AAG, and you have built your business, you and your team at AAG, and you guys got some great talent there. You built your business along, and you've written about it too in Reverse Mortgage Daily and other articles, the centralized model, or what we'd call the call center. And that's been greatly successful for you with Fred Thompson and other advertising campaigns. But this year, you've begun doing something a little different. Can you explain to our viewers just what that is and how that's been working for you?
Sure. As you mentioned, Shannon, we grew the business primarily kind of laser focused on that centralized direct-to-consumer model, television, internet advertising, running through a call center. And we decided in the middle of last year we were ready to diversify our revenue stream, diversify our origination strategies, and on the retail side into the field, you could call it distributed retail, feet on the streets.
Sure.
We thought it was important. We thought it was an important economic hedge. There's different economics in connection with the field model. You have a more variable cost model somewhere in between wholesale and retail. Times when the premiums or gain on sale are eaten into, based on the bond market movement. Times when marketing costs are heavy, the field model really shines. And we thought it was a good time to get into the business because we've had, critical mass on our centralized platform. So we decided, do we build or buy? We thought we'd have a nice 18-month head start. It's kind of what we projected by buying. So we kind of took over the RM USA employees, and they had a 40 or 50 man distributed retail platform, and we also acquired the A&B reverse platform. And the A&B team is kind of running the leadership on the business, and we're starting off with about 80 field reps.
That's a great start, yeah.
And the plan is by year end to be at that 125, 150 mark, and then next year we may even head towards the 300 mark by the end of 15. That's kind of what's been projected. So we're taking it seriously. We're going to put a lot of resources behind it, and we're going to try some new things in connection with the field model that I don't think has been done, leveraging our brand. We have the luxury of the brand, and
Sure.
Hopefully, fingers crossed, we'll see how that goes.
So Reza, what would you say that to our viewers today, who are taking the headwinds, the Buffett, not so much regulatory headwinds, but we're just in a time of challenging to reach volumes that we used to have. What would you like to say to the originators out there as your parting words for 2014?
I would say, first and foremost, stay calm, stay positive. We have, at the end of the day, a phenomenal product that solves a big looming social issue. We all know, seniors are outliving their retirement savings, and home equity needs to become part of the retirement discussion. So we know fundamentally we're dealing with a very powerful product that's solving a problem. It comes down to why are we not, penetrating the demographic more effectively? Why are we at 2%-ish market penetration? And I think going into the other, tying it into the other ingredients outside of the policy changes and the kind of structural integrity of the product, I think it comes down to, once changes happen like they did Q4 of last year with the utilization restriction, which is it's a new layer for us, something new for us to handle as an industry, we need to be quick and nimble and adjust to the new sale. We can't be thinking along the lines of, the consumer was getting X before and Y today. That's more of an internal bias than it is what the consumer's thinking. Most consumers, 99% of them, didn't know what X was. They didn't know what the product before was.
Up, right? Yeah.
Don't bring it up in your mind. Don't bring it up, verbally. This is our product, and it's still a great product. And it's more of a layer of protection to help the consumer not utilize their proceeds day one. There's a cooling off phase for a year. It's not a bad thing. So we need to be nimble. Train our sales force effectively. If you're a salesperson, don't be stuck on the product of yesterday. Think, going forward, and know that the borrower's not biased about the difference. In addition to that, I was bringing this up at the conference earlier, we need to think about not just today, but a year, 2, 3 years down the line, and think more strategically, test things, work on talking to a part of our consumer base we've not spoken to before through different marketing tactics, through different approaches, through talking to financial advisors, different education processes that you test and trial. I mean, a lot of these things, the challenge is you're not going to get the results day one or month one, sometimes not year one. But we are not speaking to a big segment of our population, and there's opportunity out there. Exactly what those avenues are and those tactics, we don't have all those answers, but we know through prudent testing, exhaustive testing, and taking some risk and thinking, a couple years down the line instead of a couple weeks down the line, that we'll get results.
That long-term view.
Yep.
Absolutely. And when we're dealing with change, that's the viewpoint we have to have. Thank you very much
Of course,
for joining
thanks for having
us.
me, Shannon. Appreciate it.
It's always a pleasure.
Thank you.
That wraps up this week's edition of the Industry Leader Update, and we want to thank you, our loyal viewers, and we will see you next week.